Hello everyone, welcome back to the 21st episode of the 2026 Portfolio Challenge series. I just wanted to remind everyone that we started with $100,000 per portfolio, and so I am quite pleased with how everything is going after a pretty rough section through April, but now we're on pace to do exactly what I wanted to do, so I am very happy with that. Disclaimer, this video is not financial advice. So in today's itinerary, I'm just going to talk about the watchlist news. I'll try to keep it a bit shorter this week. And so I'm going to be talking about why I did not leave Micron yet, some of the ELF buybacks and the Bank of America talk, some of my Robinhood thoughts, what's going on with that and the meme stock portfolio. I did buy Vista Energy, which is a South American stock, not an American stock, and I only bought it in my deep value portfolio. GameStop, why not to buy in the meme stock portfolio currently? And I will talk about that whole ordeal later on. And then this neat website, which I learned about, apewisdom.io. I'll show it to you guys and I'll decide what to do about that. And today I will be showing the portfolios at the end. So Micron, why I'm not leaving yet. I'm just going to minimize that. So my price target for 1 year from now is $1,600. And the current price target for the end of the year is $1,000. And the current price is above $1,000. It's actually $1,017 right now. So why am I not exiting it, since it did hit my target, right? So I've already taken 2/3 of my profit in the two portfolios that I care about, which is my choice value and my main portfolio, with the deep value one still holding it. I took that at 900, which was my previous price target before some of the estimates started going up, which is also something I want to talk about. The revenue estimates just keep going up, and that alongside the new analyst price targets, and I will pull that up really quick. So you can see here, it actually doesn't show when it increased, but these are all significantly higher than they were even 2 weeks ago. And here on stockanalysis.com, you can see here that everybody is just increasing their price target. All of these happened this past week, and they're all increasing it, to 1,000 plus. And so every single one of these analyst price target increases from Barclays, from UBS, Susquehanna, all these places that carry their weight in their name, it does mean a lot to a bunch of private investors. So I am not going to be exiting it yet until at least the new analyst price targets stop or the momentum slows down. Now, I also want to talk about momentum, because momentum is a thing. If you can catch the right momentum stocks, and I've actually run a simulation about this, if you can catch them, it's a beautiful thing. So here's a simulation that I made about a year ago, and I probably should remake this, because it is interesting. So what happened here is that this is the top 10 S&P 500 stocks in terms of upward movement every single month. So it's not from the beginning of the year till that month. It's from the previous month cutoff till this month cutoff, which of the top 10 S&P 500 stocks performed the best. And so I put $200 in the simulation. This is fake money. $200 per stock. And then I just held it. So it's a pretty simple simulation to make. And so the one on the left here that I am now showing, that is from 2015 through 2025, June of 2025, which is when I made the simulation. And you can see that they both input $2,000. The S&P 500 is 2,000 per month because it's 10 stocks times 200. So 2,000 per month. And it performed phenomenal, honestly. In a decade, it did almost 100%, which is exactly what you want from the S&P 500. And then the strategy here, actually, no, this is way better than what you want, because this is including putting in money every single month. So this is IRR returns. And the strategy, using the same constraints, it performed 20% better, which is insane when you think about that. 20% over 10 years is nothing to scoff at. And so when we move to the right here, which is since the year 2000 through 2025, so this is just a longer time frame. And it does increase those NVIDIAs, those Apples, those Netflixes, Googles. The big ones from the 2000s, we can see we input 612,000 for both of them. And the strategy performed at almost 900% compared to 268% for the S&P 500. Now, 268%, I think anybody would be very happy with that, considering you're putting in the exact same amount of money every single month. That is phenomenal. $2,000 a month isn't insane. It's not something everybody can do, obviously, but It's not insane to do, especially if you're married and you're two people putting it aside. So having 2 million just from putting in 612,000 over 25 years roughly, that's decent, right? Especially since it's just the S&P 500 and you're not doing it via QQQ or things like that. And the strategy, just doing the strategy over that time period, yielded $6 million, which is significantly more. And again, this is with Apple and Google and all those big early 2000 stocks. And likewise, I think once I rerun the simulation again, I'll do the 10 years. So that's going to be from 2016. I fully expect this to be probably close to 130% because we had an insane decade, especially last year was crazy good. And so was this year, actually. The 100%, to be honest, I think that's probably going to stay the same. So I will be running that. I might get back to you guys, but I do post this stuff on my GitHub slowly. I've got a bunch of these simulations that I've historically run, and so I try to put them up, one per week roughly on my GitHub, just kind of to space things out. But you can see here's just a bunch of backtesting algorithms that I've previously made. Just interesting stuff. So back to let me just exit this. We don't need this. Okay, so I think I finished covering Micron here. And now let's talk about ELF. Oh boy, so my price target for ELF is still 80. The current price is at 56, and it's been rising pretty significantly over the past week. I think it started the week at 50 and now it's at 56. So that's that's an exactly 12% gain. And I genuinely do love this company. And I don't think I've been more impressed by a CEO other than early Zuckerberg and early Elon Musk. Because they were just, moving fast and breaking things and literally pushing human boundaries in their respective fields. And so in this recent Bank of America fireside chat, and you can find this online, by the way, on their investor page, you can just log in if you have a Bank of America account and you can listen. And so they talked about the expansion, their roads expansion, Naturium, and in general, their ELF expansion and how they're going to reprice things. They're going to go back to being more value oriented and how they're actually sandbagging the revenues. And they talked about this openly, meaning they're giving revenue targets that they know they can easily hit. So when you see the revenues that they're putting out there, just add another 10 to 20%. And then they also talk about the future expectations. And most importantly, I actually did enjoy hearing them talk about their expansion. They talked about a $600 million buyback that they authorized, and they've already completed $50 million of that. Now, $60 million is just over 10% of the company, but once they buy the stock, it will be raising the company price. So it's going to end up being around 10% of the company, I believe. And so it seems that they're interested in the stock being around 85 to 90, because he said specifically that so long as they see the mismatch between the stock price and what they expect the stock to be at, they're going to keep doing the buybacks. So, just some rough calculations puts that their target being at 85 to 90 more than likely. And so I'm genuinely debating going harder into ELF, and it is pretty significant, and you'll see that later. It's a significant portion of my portfolios. So I'll have to think about that, but I am very, very bullish on ELF. And I think the CEO himself is very bullish on ELF, and I think he wants shareholders to be happy as well. So yeah, he is insane. He knows all his numbers inside and out, and it's genuinely very impressive just to listen to him talk. Especially when you listen to other people on the panels that they're doing when they talk. I recommend looking at him because you can see how his wheels are turning while they're talking, and it's very impressive. Oh boy, Robinhood. Okay, so their price target for me was 95. Their current price is 95. So am I going to be selling? Again, not currently. And why not? Because of momentum. Like I talked about earlier, I like to wait until momentum dries up to sell. And so I do think Robinhood, being a very momentum heavy stock, can carry itself through to 110, 120 range in this specific run. And that's on account of the Trump accounts being opened recently. So you can now go and sign up and download the application for the Trump accounts, which is a custodial account for your kids that you get $1,000 for free from the government just to open it. And their CFO, which I do like him a lot actually, he was saying that they're getting requests from states to do this. So I do think, and this is me being a capitalist saying that, I think that getting people invested, the government getting people invested into the stock market from a very early age, and this can be state or federal, I think that's a great thing. And then additionally, there's the 2000 PDT, pattern day trading rule. So they just cut that from $25,000, where you cannot day trade with under $25,000. They cut that to $2,000. So a lot more people who are on the Robinhood app, which don't have over $25,000, they can now day trade, which, you know, Robinhood's revenues are from trading. It's not from people buying and holding. So yeah, I wrote here, when I sniff momentum drying up, that's when I'm going to sell. And I did want to talk about the meme stock portfolio with Robinhood because that's kind of unfortunate, but I am very happy. And I wrote this later into the presentation. I am very happy that this happened. So what happened? I had calls. Well, I did not put in the calls at the beginning of, or at the end of last week. I put them on Tuesday because that's when I remembered that I did not do it. And so I put the covered calls at 77, which capped my upside, obviously. Now I'm doing a poor man's covered call strategy, so I'm not holding the underlying shares. I'm holding leaps, meaning that these short calls right here are growing at a faster rate because they're higher delta than my leaps, my long calls. So my leaps value would have been 140K, but this is now worth negative 61K, and I am stuck at 85K. Now I said, I talked about that in that I am honestly very happy that this happened because I do not want the meme stock portfolio to be a fluke. I am trying to get this through using covered calls, using meme stocks, which is Robinhood, GameStop, Rivian, things that are highly movable via social media. So I'm very happy that this happened and that it's not because I forgot to do it one week that all of a sudden that I just earned a lot of money because of that. And again, this is paper money. So I am happy this happened because I do want to prove that this method can work. So Vista Energy, this is not an American stock. I talked about this last week. This entire stock in its a whole, it's a big value stock for me, but it does have good price targets. It does have good revenues. It's growing volume. It's an oil company down in South America. And so my price target is 230 and they're currently at 75 roughly. So I bought it with a deep value and it's breaking my rule of American stocks, but I don't know. I saw so much upside that it hurt me kind of not to do it. So we'll see at the end of the year if this was a bad decision or a good decision, but it is what it is, right? And then some of my GameStop thoughts. So their IV recently has fallen significantly from their big run up and run down. IV is volatility. And they are still in the middle of the game, or the GameStop and eBay saga, which, you know, they just actually released a few days ago. They upped their stake to 7.8% or something like that from 6.5%, something crazy. So that whole thing is going on. And if that does end up happening, there's going to be a ton of dilution. Now, dilution, unlike a split or a reverse split, is that the amount of shares you have doesn't change, right? So just the stock price goes down, the company makes more cash, and, you know, your stock price just goes down with it. So there's going to be a lot of dilution ahead. And obviously they can wait till it goes up to another run up to 26, 27, maybe 30. Maybe Roaring Kitty comes back and then they do the big dilution because then there's a bunch of hype. But regardless, if I do go this route, it's going to be a poor man's covered calls, which will be slow. But I can get roughly 150 leaps for January 2028 at 14 per week. Again, this is alpaca, so using the paper money, I'm getting not the middle of the call spread, I'm getting just the buy value. So that'll give around 2K per week. But again, I'm not sure about the stock price because it's going to keep dropping. So the question is, you know, I've got, I don't know, 20, almost 30 weeks still in this year. So 30 times 2K, that's only 60K. And so that all depends now on how much the leaps are worth, you know. If they stay at like $6, if GameStop stays at above $20, that's going to be, you know, a decent amount of value. We're talking about 80 to 90K plus the 2K per week. So I do reach my end value. But yeah, it's kind of a debate. And I've been pretty busy with school, so I don't have much time to think about this, to be honest, recently. So yeah, there's that. And then there's apewisdom.io, which I recently learned from Reddit. Now, I am debating this, and I'll just show it really quickly. First off, I do want to show GameStop again. Yeah, so GameStop boosted to 7.8% from 6.6, and this is in a week, so it boosted another 2.2%, or another 1.2% in a week from the previous week, which they also boosted around 1.5%. And this is, again, likely call options and stuff, and you can see they've probably been diluting, to be honest. They probably started diluting way up here at 25, just the rate at which it's dropped, that's not natural, to be honest. And then I wanted to show Ape Wisdom. So Ape Wisdom is a pretty neat website, which is going through the Wall Street subreddits. So obviously Wall Street Bets is the big one, but then also our stocks, investing, things like that. And it also takes into account everything else. And then it just, whenever people mention a stock, it'll count it, and it has 24-hour counters, trending day, 30 days averages, or it's not averages, but just a graph. And so I might take half of the meme stock portfolio, we'll see, and just try and do something with it using this, because this is truly meme stocks, right? These are the trending stocks on social media, which is what a meme stock is. Even, Micron, it's not a meme stock technically. People don't think about it, but like by definition, it is a meme stock right now. So is ServiceNow and NVIDIA. So I do think I might exit all my Robinhood right now. I'll take the loss, whatever. I'll do half of it with GameStop, and half of it, I think I'll do just this, because I can't find a way to actually backtest this. They don't seem to have... I might just store it once a day and then run it like at the end of the year. But I do want to try and do this with Alpaca, and I can only get 3 portfolios on Alpaca at once. So we'll see what happens. But this is honestly interesting. I'm curious to see if you get in, right? If you do once every 24 hours and you change it and you rebalance and everything, can you beat the stock market using this? And I think you can, just based on how everything's been moving. Trump mentioned IBM for a second the other day. He said, IBM's gone up, and this is pre-market, right? This is another 9% on an already huge move that already happened. And that's just because Trump mentioned them at the end of Friday. So, this market is insane. It is a meme market. This reminds me of 2020 and 2021, meaning a crash can arrive at 2022. So that's next year, maybe? Might be end of this year. But, why not ride the wave? Right? I mean, this is beautiful. I haven't seen anything this neat in a while. And so I was opening this and just having fun with it. So yeah, there's that part of that. And now let's just talk about my portfolio. So this is my main portfolio, which kind of mirrors my real portfolio, which is my gut feelings, value picks, high volatility. And it's mainly based on conviction. And so ELF is my biggest conviction play right now, and then Meta is after that, and Robinhood after that. And obviously Robinhood, it grew just because of its price. I did not buy any more Robinhood. Same with ELF and Meta and APH. And here are my profits and losses so far. This includes also stocks that I've sold. And yeah, you can see Micron is carrying this pretty heavily. We'll actually have to see at the end of the year if I didn't have Micron and SanDisk, how I would have performed. I think I'm still in the plus though. And then my deep value portfolio, which is just a pure forward PE play with some guardrails. And again, I broke it this week by buying VIST, but I have a really good feeling about that. So, I might be wrong. And again, we can analyze this in hindsight. That's perfectly fine to be wrong. It's not real money that I'm losing here. But yeah, so this has also been very profitable. And thank you, Micron and SanDisk, for actually fitting into the PE ratio here. Thank you. You guys just saved this for me. And obviously Jen, Fang, Siri, I've got a bunch of winners here, and then PayPal and pins. I gotta go look at that again because I have a feeling that they're actually not in it anymore. I know Fiserv is for a fact. And then my choice value, which is my value formula picks weighted by conviction and volatility. Again, Robinhood is the biggest one right now, and ELF is up there too. I am very highly convicted on both of them. With my choice value, portfolio profits and losses. And I believe Robinhood is profitable for the first week on this portfolio, so I'm very happy with that. And everything else, of course, Micron, everything else, except for Celsius, is doing pretty well. Alpha is going to be profitable probably this week. And I've closed most of the other ones. Thank you guys for listening. Good luck this week. I'll see you next week. Bye-bye.